Well, welcome back to the channel. Now this is a weekly forecast for this week. So today is Monday, brand new week, Monday the 2nd of March 2026. This weekly forecast is going to look at the price action and forecast for this week, and I'm starting off with the monthly chart. So I'm saying if NQ decides to close this new week opening gap, which is also a new month opening gap, then I anticipate seeing this immediate rebalance traded to. So this could be hit and then rejected for lower prices. The bias is bearish. I'm bearish for the month of March onwards. So I'm looking to see if price could rally to immediate rebalance and then reject. This new week opening gap was already retraded to. So we've traded past midpoint already. We've left a small portion open. If price wishes to close that, we'll be trading onto immediate rebalance, and I'm looking for a bearish rejection from there after seeing an immediate rebalance on the monthly time frame. Aside from that, the targets are on the sell side. So I have 24,150, very good target. 24,240, that's my short target. Long hanging fruits at 24,449.25, and this drawn liquidity is 23,280. So that's it from the monthly chart. Let's drop down to the weekly. So if I toggle on 1 week, you could see this is the weekly chart. I'm drawing your attention right now to sell side liquidity, and I'm also drawing attention to this weekly discount week constant encroachment right here. So you can see that price has finally displaced below that level. We're above it now, but we have displaced below it. That was very important. This level right here, weekly discount week constant encroachment, is this week's constant encroachment from high to low. The midpoint of that week is here, and that's the constant encroachment. So we're unable to trade and stay below it all of last week. Last week rejected it and we never got below, so bearishness was not seen confirmed last week. But this week we have seen some bearish displacement below that price level, and I'd like to see price stay below it and expand bearishly for lower targets. Now if you watch the previous video, you'll remember that that's exactly what we're looking for last week. But you can see last week's range from high to low. This last week's high and low. Last week this candle here did not confirm bearishness, but this week we're already seeing displacements below that level, and that's good for bearishness. Let's hop on to the daily chart. Now on the daily chart, you can see the low hanging fruit objective being this swing low. Price is so close to it. It's certain that price is going to take this low, and other targets are next. So I'm anticipating very low resistance liquidity run conditions to swiftly run the low, which is this, because the sell side here, price has rallied, swept buy side. Other pairing has taken place here with the buy stops above this swing high, and we should be distributing solutions here and as well here. We gap lower and want to see price distribute below this low at 24,449 and a quarter. Now if you remember, we had a settlement turned off when we're doing the weekly forecast last week. So if you remember that forecast, the settlement here was turned off as this now, and you can see this suspension block. So price rallied on Nvidia news, inverted this the next day, invalidated it totally, sweeping previous this low, and we closed bearish on the week. If I toggle on settlement, you find out that that was actually just a volume imbalance and this. So there's no suspension block here. Price did not invalidate bearishness. It's not invert the array. If you look at this, I'll just draw it out. So right here is a volume imbalance. You can see the bodies of the candles remaining below the volume imbalance. It's not inverted. So it's very important to turn settlement on and off while doing the analysis. So that being said, you can see it was just a raid on buy side liquidity and then reverse lower. technical assessment on, you could see it clearly. Still, it's a read on buy side and it rejects lower. So price has gap lower. We've filled in most of that gap. Now my attention is on low hanging fruit objective. I'm dropping onto the 4-hour chart, and this begs the question, why am I certain that there will be low resistance liquidity run conditions moving towards the low hanging fruit? So I'll take that off. Now, what do I think is going to decline to 24,410? Which is here, and the low hanging fruit. Why do I think these targets are going to be taking a low resistance liquidity run condition? That's because of the order flow. So you see buy stops, a large pool of buy stops right here taken. If you recall, look at the previous market reviews, you see that at level this are suspect. They were just too clean. Just look at this, so clean. Even now it is still relatively equal, this and this. So the buy side up here was just too clean. Price swept it. Buy stops taken. Smart money is short. Someone is looking to cover those short positions below these lows and below these lows. So we've traded below those lows. We'll spend some time there for short covering. We're going to trade below these lows as well. And how are we doing it? Look at, we have pure inversion of this array quickly. We have sell side imbalance, buy side inefficiency staying open. So all of these are staying purely open. Price was not able to trade up there. That's weakness. And gapping down is also weakness. This is an engulfing candle showing more weakness. And now I'm bringing attention to these arrays, these two high type resistance. So the first one is the midpoint between this low and this high of this candle, up close candle that printed immediately after the gap down. So the constant encroachment is here, as well as the constant encroachment of this wick, which also aligns with the constant encroachment of just the body of this candle. That gives us these two levels, and price is going up into them. I'm looking to see resistance there and a displacement lower. So moving on to the 1 hour time frame. On the hourly chart, you can see this portion is still left void. So there's no buying, there's no selling within this range. That's potentially a draw on liquidity if I'm wrong. So if I'm wrong on bearish targets, or if I'm too early on bearish targets, or if my bearish bias is premature, if price is going to rally for some buy stops or rally for any purposes, you rally for two things. You rally for void portion of new opening gap, and you rally for this clean, suspicious, too clean, extra clean, equal highs basically. So those are the two arrays on the buy side, but I'm sticking to bearish bias and I'm looking for low hanging fruit objectives within this session. So I'm noting the void portion on the early chart, and I want to look at this suspension block right here. This, and I'll close after looking at the 15-minute time frame. So this sell side imbalance bias and efficiency, the bodies do not even close within it, nowhere within it, they close way out. But if you look at it, below it you have a suspension block, because I'm just zooming that in. You see the volume imbalance right here and the volume imbalance right here. That makes this a suspension block. Now price has left wicks in it, but the bodies are close to the low, far in the lower portion. That's bearish. This one was traded above. When you have two inefficiencies, you expect the further one to be traded too. But if you were going short early, you have your entry here and afford the stop loss for the other one. This tiny one is a breakaway gap clearly, and I don't want to see that traded too if we are truly weak and NQ is bearish. The maximum I'm expecting for is to see a manipulation to this high of my raise, which is not that necessary. We could displace lower from here, given that we've already taken out a swing high, so liquidity rate in the session is valid, and we could look for lower prices already. Now I'll drop down to the 15-minute time frame, and here you can see my narrative. Asian highs are right here. I'm not expecting them to be taking this session. If they're taking, I'm premature on shorts on the week, and shorts could take place later in the week, but I don't expect Asian highs to be taken. Main opening price is here. I would like to be short above it, so if a manipulation goes higher above it, that would be good for shorts, given we see confirmation to go short on lower time frame. I'm also bringing attention to London session low. That's the low hanging fruit objective as well. And on lower time frames, you see pre-market low as well. Those will be very good targets for the session. So basically, that's it for this analysis. You see liquidity has been confirmed on this lower time frame. That's London launch highs have been taken. So I've seen a bullish Judah swing on the day, and I'm waiting for just self-delivery bearish. I'm permitting it to go as high as main opening price. I'll be looking for the opening bell for more insights on the models I'm willing to trade today. So that's it for this market forecast, market outlook. If you found that insightful, hit that like button. Most important, subscribe to the channel. That gives me motivation to do more, and I'll see you in the next video.